Hey guys, how's it going? You guys know the drill. If you like my video, smash the like button, subscribe if you haven't. Okay, I haven't done a video on this channel maybe about for a few weeks. I've been focusing my attention on the sports card channel, but I wanted to get into this topic of the Federal Reserve, gold, and stocks. And last month, the Biden administration, we're talking about this infrastructure plan, $3 trillion. And before that, under Trump, they had all this monopoly money, increase in money supply, which helped ignite the stock market boom, even though everything was shut down while small businesses were getting destroyed. And if you're a small business owner, you probably got screwed over, but if you're owning these stocks and the S&P, you probably did well. And I believe this will continue for the next 12 to 18 months. I think I talked about this in the other video. You know, if the yield curve is upward sloping and as long as, inflation doesn't get too out of control, stocks is are the place to be. Gold miners, in my opinion. I'm not telling you what to do. This is just my opinion, by the way. Gold miners, silver miners, that's the place to be. I talked about how inflation is starting to get in the 1970s category, what's called stagflation. Now, I was showing you some of the baseball card products that we sell, card products. Now it's tripled and quadrupled in price compared to 1 year ago. And now I told my wife, I don't want to buy some of these card products. There's no good arbitrage in it because everyone is just going to buy it at cost. And, you can't make money on the secondary market now. Now, that being said, because of this infrastructure plan, there have been rumblings about, the Federal Reserve trying to artificially cap the long end of the curve. And, they call this the yield curve control. They don't want the long end of the curve to get way out of control for various reasons. And if you notice the Fed meeting last month, the interest rates were topping out, I believe, at 1.75%. And they've suddenly started to cool down. And in addition to that, I did notice that Johnson and Johnson, or the CDC and the government, they don't want this Johnson vaccine out there because of potential blood clots. And because of that, that headline, you saw the 10-year yield just starting to go down after that. I'm not saying that, it was the direct cause. It may have been, buy the rumor, sell the news, because some people were anticipating, the vaccine rollout wouldn't have gone as smoothly as, the market was pricing it. So, that's something to note. And I noticed when the yields were going down, that's when tech stocks started to rally. While the interest rates were going up, tech initially was okay, but then they started to, lag other parts of the S&P 500, other parts of the stock market. So, in my opinion, as long as, the trend continues where these interest rates don't go too high, on the long end of the curve, tech stocks will probably do well, which will help the S&P 500 and the Dow Jones Industrial Average go higher. And if they lag, I'm still bullish on the S&P 500. I have Apple stock, but and I do trade the XSP options, as a CBOE option. It's the mini SPX. I've been trading that. The dips, buy the dips, sell the rips. Just simple as that. I don't have to put that much money down, and it's a cash delivery option. So it's much more convenient, in my opinion, than the SPY. So I've been doing that right now. And, Fed funds rate is at zero. So, like I said before, Fed funds rate zero, long end of the curve, what, 1.6%? That's bullish, in my opinion. And yeah, we're going to get corrections. No doubt about that. but I'm going to be buying those dips. And the miners, inflation is picking up, like I said, and the market really wasn't touching the mining stocks. And I've been looking at some technicians. Technicians are getting bullish on gold and silver and miners. So, like I said, 12 to 18 months, this market should be good. Where I do see potential headwinds is there is always a change in Congress. The last, 25, 30 years, sometimes it's Republicans, sometimes it's Democrats. And right now, the Democrats are in charge, and, we have all this spending. So if I were to take a guess, the Republicans are going to take charge in 2022. And there's probably going to be cuts, I would say in quotes, in the level of spending. So they're going to increase spending, but not increase it to the amount that they did in 2020, 2021. And that could potentially have headwinds. And if you have COVID variants, and we could have a crazy situation of, okay, you turn off the economy, you turn on the economy, and they're talking about South African variants. They're talking about variants in India. They're talking about variants in Europe. So, that's just something crossing my head. Pfizer's CEO said that he wants people to get vaccinated every year. So it's going to be a yearly thing, in my opinion, where they're going to try to, push this down. And if they can't get the vaccine on time, are the states going to shut down? That's something to note, that we're living in crazy times, in my opinion. Last year was insane. This year, some was starting to get back to normal. I see the malls are packed. Last year I couldn't go to a mall, so especially in Chicagoland. I know, like, places in the South, they really weren't really closed. Maybe a month, maybe 2 months. But yeah, what do you guys think? What do you think about the stock market? What do you think about gold and silver? What do you think about the potential of the stock market topping out in the next 12 to 18 months? That's what I see happening. Once again, I will assess the data, but you know if they start to raise the Fed funds rate, by the 2022, at the time they cut spending, what's going to happen to the 10-year yield? In my opinion, even though there's inflation right now, I would not be surprised if the 10-year yield starts tumbling down, and then you see the yield curve starting to narrow, and then it'll invert going into 2023. Now, we will see if that approaches. Once again, I'm not going to make, a play on the yield curve, playing the bonds. No, I'm just going to be playing the stock market and also mining and silver stocks. Last thing I wanted to say is that, I've been doing a lot of videos on sports cars. So, sports cars, some of the cars that I've had have doubled and tripled. And sometimes it's gone 10x within a year, 20x within a few years. And I look at that as unsustainable. That's why I've been putting more emphasis in the stock market. And that's what I've been talking about on my other channel as well. And, those numbers will mean revert. Even though I'm bullish long term on cards, it's just like, why would I put too much money in cards when, I could look at the stock market? The S&P 500 has not even doubled yet from last year. It's almost doubled from the low, but it's not there yet. And if I have cards, that are gone up 3, 4, 5, 6, 7x within a year, when the normal yield was 10 to 20%, it's probably not the best time to buy sports cars. I mean, you could find some deals here and there, but it's getting much, much, much harder. So yeah, that's why I am bullish on the stock market, because comparative to cards, I find value. Even though people around me are saying, "Hey, stock market's overvalued," I'm like, "Yeah, it is overvalued, but not as overvalued as cards." I'm starting to sell some of the cards slowly but steadily, and I talk about that on my other channel. Why? It's supply and demand also. Anyways, guys, if you like my video, smash the like button, subscribe if you haven't. I'll talk to you later. Thanks, guys. Bye.